Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and before we get into the charts, I'd like to remind you to stay around to the very end of this video, where I'm going to be giving you some links to some websites that I use for gathering news and information, along with some of the geopolitical news that we see unfolding before our eyes. Now, this week we had a very interesting week in the market, starting with the diamonds. This is the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I zoom in here, you'll see my forecast lines from last week. Now, this was the zip line that I put in with the upside target of 343.15. And if you recall last week's report, I said that we would most likely go up to test this resistance level and then most likely pull back. So that's exactly what had happened. Right here, we have a shooting star, and on that shooting star, we had a pretty big drop in volume right there. That tells us that the buyers were losing some of that momentum. And bam, we pivoted lower, and within 3 days of that shooting star, we came right back down to the downside target that I set a couple of weeks ago. And I also mentioned, please go back and listen to the recording because I say a lot of things and sometimes people overlook that. I said that most likely we would be stuck in a trading range, and that's exactly where we are right now. This is the support level. Here's resistance. We could stick around in here for a little while. Option traders are going to love that because we have time value that we collect. And each and every week, that time value decays and it deposits itself in the form of cash in our account. So next week, option traders, be ready. My alerts for rolling out to June will be coming out right on Monday through Friday. I'll be putting out at least 2 alerts per day. So again, stay tuned for that. Now, analyzing these charts, you can see that we gapped up today on slightly higher volume on unemployment numbers. I'll get to that in a moment as well. But that gap is something that you have to take note of because 80% of the time gaps fill. Now, interestingly enough, we have a gap down below the market here, and we have a gap above the market right there. That was gap down from Tuesday. So we're caught between 2 gaps. Looking at that slightly higher volume, look at the buy signal on the CCI, look at the hinge on the stochastic here. That is a positive divergence. On the stochastic, we have a lower price low there, but a higher low on the stochastic. So that is favoring a short-term rally. So let me get rid of these lines, and I'm going to redraw these zip lines for you so you have targets, and I'll put those targets on the chart here as I superimpose that with my text tool there. So I do believe that we're going to go a little bit higher and possibly test this gap fill resistance. Now I'm coming in with a target just below the gap fill to be a little bit more conservative with hitting that target. So 339.80 is my upside target for the diamonds. Now I had a comment come in the comments field down below the video from last week saying, well, you know, your prices are going up, but your bearishness is still bearish long term, and that's absolutely true. Long term, I do believe that many investors are going to be shocked at what they see to the downside. I have not budged on those downside targets. You can see that if I go to a monthly chart right here, my downside targets across the board are the March 2020 lows, and I have not budged on that. This is a monthly chart, and you can see that already this month of May is a red candle that's doubling as a hanging man and a bearish harami. So this monthly chart is looking extremely bearish with my downside target again all the way down here for the diamonds right around 184.45, but actually it's going to be that low right there at 182.10. And the markets right across the board, I believe, are going to hit the downside 2020 lows. And so I can take positions bullish and bearish at the same time. My option positions are bearish with negative delta. Those are longer term positions. And if you're part of our membership, you'll know that just yesterday I took a long position in AMR And our members are already up 40% in one day on that. And that was a long position with a bearish long-term outlook. You see, so you could trade both sides of the market as long as you're looking at the charts on individual stocks. But each and every week on the weekly market report, I go through the major market indices. I don't get into the individual tickers for stocks until I get to Wednesday. And then I do a full hour of rapid fire stock analysis, which in fact, last Wednesday, we covered 55 stocks in 72 minutes. And I went a little bit over on our time. Usually I try to do that within an hour, but we did some OT, some overtime to help our members in creating more value. And a lot of those star favorite targets are already hitting their target prices as well. So again, upside target on DIA is 339.80. Keep an eye on the volume. As the volume drops and the oscillators start turning down, I would not be surprised at all to see the diamonds break out below 330.56, and we could even see that by the end of this month. So that's DIA. If I look at IWM, again going in alphabetical order, we came very close to hitting that upside target of 177.89. We actually went up to 177.34. So what? We were 55 cents off the mark there. It showed a shooting star, gap down, boom. Tested the support level down here, showed up with a hammer pattern, gapped up today, and what do we got? We got that channel all over again. So what I'm going to do is I'm going to delete all these lines and redraw these channels, but I'm going to do so with dotted lines so you can really get a better eyeball on what we're looking at here. I'm going to go down to this support level and this high right here. So here's your trading channel. And within that channel, my forecast is going to be for next week, Monday and Tuesday, we're going to see a little bit higher. And I say a little bit because IWM has lower volume. Remember, the DIA had slightly higher volume. This has lower volume on the way up. So I think we're going to go up to 177.02 for IWM, hit resistance right here from the high on May 1st, and then we'll have to see whether or not we pivot lower from there. So again, upside target, IWM 177.02. Moving on to the Qs, ticker symbol QQQ, basically the tech sector. Again, remember, go back and listen to my recordings from last week. I identified this horizontal line as R1. Remember, I put that as R1, and I even used my little drawing tool up here to draw R1. And then I said the upper level would be R2. So we are at R1. I still have my target set to the high side on that level right here. This upside target for QQQ, I think, could hit Monday or Tuesday. Let me get that data box to pop up. There it is, 327.61. And then I think we're going to pull back from R2, or resistance level number 2. We do have a good chance of breaking out over R1 because we have a slightly higher volume as we're closing right at that high. And you can see the momentum oscillators are still showing a little bit higher. So again, to reiterate, upside target is 327.61, and then right back down on a pivot to 325. So that is the Qs. Looking at SPY, pretty much the same story. There it is. You got the trading channel. Support level down here at 401.73. Resistance up at this level at 418.51. Came within pennies of hitting that early on this week. I think we're going to move right back up to that level on Monday, possibly Tuesday. But I do believe that that R level, that resistance level, will hold. So I'm keeping that upside target at 418.57. And then watch out below as we pivot from that level and then possibly move right back down to the bottom of this channel. Now, keep an eye on this. These are the angles that we look at. When I draw to the right, I'm looking to the left. See, here's an upside angle. Here's an angle. Notice how all these angles are pretty much the same. This is why I drew that just the way you see it, like that. And if you look at the timeline, if we go up to that resistance, hit that, pull back, and you look straight down below, we're bringing us very close to the end of May down here. All right, now my timeline into June and early summer, July, as I reported last week, is I do believe that there is an earthquake about to happen. We're starting to feel tremors in the banking system again. I'll get to that in a little bit. But that problem, that crisis is not over with yet. So if you're deciding to take any new long positions, I would suggest you trail your stops, keep those stops tight, and make sure you're protecting any profits on the way up while limiting any downside risk. Okay, so that is SPY. Now, looking at the VIX, I know some of you have been holding out for a long time, waiting for my upside target to hit, which was back here at 2120. Well, that's exactly what happened yesterday. My upside target was 2120. I kept that in place. Yesterday's high was 2133. So we surpassed that by 13 cents. And then what happened? As soon as we hit my target, bam, it pivots lower. Now, remember what I said last week. I said these positive divergences in the VIX is something you have to pay very close attention to. I drew that line showing you lower lows, but I drew this line down here showing you higher lows on the CCI. That's what I called the bullish flag, but I said that that's not a bullish flag pattern. That is a bullish flag when you see that positive divergence. And so I said you have to wait for the trigger, and the trigger did occur in the form of this little candle very closely relating to a hammer candle. That happened on Monday. Tuesday we rallied. Wednesday we continued. Thursday we topped out, hit the target, and then pivoted lower. Now, I did mention that I would talk a little bit about the one-day VIX. And here's the ticker symbol for this. It's VIX, the number 1, and then D for day, 1 day. VIX, 1 day. And look at what we see here. Now, I cannot make a guarantee on the one-day VIX, but I have always given guarantees with regard to gap fills on the 30-day VIX. Now, that is an open gap to the upside. So this is going to throw a little bit of a wrench into how people are measuring the VIX these days. I think the VIX could go a little bit lower after this gap, and then I think we're going to pivot up with a higher low. Since this one-day VIX came out, we have the ultimate low here, a higher low. I think it's going to come back down a little bit more, maybe Monday and Tuesday, not necessarily a gap during that time, but then I think we're going to see a pivot with a higher low, and then I think we could see the VIX ripping to the upside as we get into June. Remember, the volatility index open interest, as I mentioned last week as well, is concentrated in June at the $30 strike. Look at that. We have about 500,000 open interest there. And if you look at the $40 strike down below, I'll have to scroll that down, we see about 400,000 right there. The expiration for these options are June 21st. So between now and then and possibly into July, I think we could see a rip-roaring rally in the VIX. And again, this is the 30-day VIX. I think it could go just a little bit lower. I'm going to reestablish this target up at these highs. I think we're going to go back up to test that high. And so let me draw my little zip line this way, and then I'll clean up my chart after the recording is done to get rid of these former lines now that the targets have been hit. But my upside target on the VIX is 2137. Now, for those that trade the VIX, that's a very strong percentage of gain from this low to this high yesterday. And I think we could see that very same percentage of gain for those that trade the VIX. But you have to be careful. The VIX is pretty volatile. If you're trading options or anything related to the VIX, UVXY perhaps, you have to be very careful. I would say trade in moderation and make sure you're not trading too big at all. Okay, so now let's go to the geopolitical news. First and foremost, you have to understand that the tax receipts are now down 29% month to date relative to last year's levels. Well, if we are dropping in our tax revenue and the government is spending more than they ever had before, do you think that's going to create a problem? Well, I would say so. That's like you getting a pay cut in your salary, but you go out there and you just keep spending away on your credit cards. And I'm going to get to that a little bit when we go to the Forex factor. I'm going to give you a website to pay very close attention to here. So this is something that is made public. Goldman Sachs Global Investment Research put this one out. Notice what's happening here. Of course, Janet Yellen continues to cry that we're going to run out of cash soon. I don't think we're going to default, but the threat of a default could put some pressure on the markets. I think they're going to put some emergency measures in place before that happens. But her putting out the warning does not help things at all. In fact, it literally causes a move by those who trade our currency to move into alternative currencies. And you'll notice that the BRICS nations are working very hard to continue their attack on the US dollar. And that is the big threat that no one is talking about. Here on this slide, again, you see more politics being played here, but they're playing a game of chicken because Joe Biden said that he would veto anything that came across his desk after it was approved through Congress. And so we'll see whether or not that actually happens. I believe that's an idle threat, but again, we'll have to see. I'm not going to talk too much about politics because a lot of people get the hair on the back of the neck raised and the comment page starts to light up whenever I do that. But these are the facts. These are the news headlines that come out, and it's pretty much what's not being reported in the financial networks. All right, now this one, Fed emergency loans rise again amid renewed financial stress. Again, this came out through Bloomberg, and just recently, Jay Powell came right out, and the reason I'm showing this slide is because these are his exact words. He said conditions in that sector, meaning the banking sector, broadly improved since early March. Oh, really? And U.S. banking system is sound and resilient. The reason I'm pointing this out, folks, is because this is a bold-faced lie, an absolute lie. In fact, within hours, we had reports coming out more about how banks are potentially insolvent. We have here Amit Saru, who's a professor at Stanford University, said it's spooky. He says, let's not pretend this is just about Silicon Valley and First Republic. A lot of the U.S. banking system is potentially insolvent. That is a fact, folks. So when I tell you this banking crisis is just getting warmed up, I have the facts to prove it, and there's lots of evidence out there. In fact, here's some more. This article came out through Investors Business Daily. Investors fear 12 more major banks are still in a hot mess. There's some evidence there. And what do we have here? I posted this on Twitter today. U.S. banking crisis. It says here in this headline through Yahoo Finance that close to 190 banks could collapse according to the study. And there's a link there. Just go to my Twitter page and you'll be able to read that link. Now, remember what I said about the BRICS nations. Look down below at the fine print down here. We have 19 more countries are filing applications for membership to BRICS. This is just ahead of the summit that is taking place next month. Folks, if you are in the dark with regard to what's happening with the US dollar and the attack on the US dollar, then you need to move out from under that rock, go out there and search for the news, plug into my reports, read headlines with me, and then at the bottom of these videos, I am encouraging our viewers to post news and headlines that come up that are relevant to the market. And again, as a team of people, and I'm calling us all a team, we are able to enlighten the audience. So if you have a headline that you want to share, go ahead, post it in the comments field below. I will repost that, and then you will be able to read your comments against your posts. It's going to be a lot of fun when we all come together that way. Now, remember I said about Forex Factory. This is a website. It's basically forexfactory.com. Now, I like this page as a source for getting relevant news and news releases and unemployment data. Here's what I think is going to happen. I know this is a bold forecast, but you see here that the unemployment rate was forecasted to come at 3.6%. It came in lower. What I believe we will see in the coming weeks is I believe we're going to see a revision. See, in the middle of the night, right after midnight, when everyone's sleeping, they tend to revise these reports. That is something that has happened in the past. I believe it's going to happen again. I think they're trying to buffer or even distract the public and investors away from this banking crisis. You have to keep your eyes open, keep your head on a swivel, keep your periscope up, look 360 degrees around you, and make sure you keep an eye on the timeline. As I'm forecasting, the end of May, throughout June, and into July, I think could be a roller coaster of a ride for the market. Investors might be a little stressed. I think option traders are going to be celebrating. But either way, stay tuned to this weekly market report, and I'll give you the news as I see it. Until then, stay tuned. I'll talk to you on Wednesday on the Midweek Report. So long. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte and this is my 7-point trading checklist.